It's the third bi-monthly briefing of the Monetary Policy Committee for the year, which aims at intimating Nigerians on how far the economy fared in the past 2 months. The central bank governor starts the meeting with a look at how events in the international market is affecting the domestic market. Chief amongst these is the Russian-Ukraine war.
The bank further disbursed the sum of 1.5 billion naira.
One of the burning issues on the minds of members of the committee is the inflation rate, which has seen a rise to 16.82% in April.
The recovery of output growth will continue, but at a much subdued pace, considering the unfolding domestic and external shocks to our economy. The sharp rise in inflation across both the advanced and emerging market economies has generated growing concern among central banks as the progressive rise in inflation, driven by rising aggregate demand and wage growth, is putting unsustainable upward pressure on price levels.
Besides raising the monetary policy rate to 13.5%, the Apex Bank governor explains that its intervention in the agriculture, energy and power sectors, which is running into trillions of naira, is yielding results. He plans to leave the interest on loan facilities at 5%.
The committee reviewed the performance of the bank's intervention schemes targeted at stimulating productivity in agriculture, manufacturing and industries, energy and infrastructure, healthcare and export, and micro, small and medium enterprises. Between April and May 2022, the bank released the sum of 57.9 billion under the Anchor Growers program to 185,972 new projects for the cultivation of rice, wheat, and maize, bringing the cumulative disbursement under the program to 1.01 trillion naira. Disbursed over 4.2 million smallholder farmers cultivating 21 different commodities across the country.
This is the first time the central bank is increasing its monetary policy rate since September 2020. This is just as the bank plans price stability that is responsive to the nation's economic growth.
Oh yes, indeed, that broke as well yesterday. It was not status quo as had been for a few months now. The rates were changed. What are the implications of that? We have with us this morning Mr. Paul Alaje, who is a senior economist, SBM Professionals, and also a fellow Institute of Economists in Nigeria, and also a fellow of the International Management Consultants Board in the United States of America. You're welcome to Sunrise Daily this morning.
Thank you so much for having me.
Well, first, did that come to you as a surprise that the rates were changed?
No, it wasn't.
It was suspected?
Yes.
Okay.
But I was not expecting as much as 150 basis points.
Okay.
I was expecting maybe an increase from 11.5% to about 12%. Because
that would have been a marginal increase.
Yes, it should be a marginal increase because you need to consider other parameters before you increase with 150 basis points. That's a lot, even though we have a lot to deal with. I remember I was speaking with one of your correspondents yesterday. She had a live broadcast, I think Business Morning.
Yes.
And I was asked as to my expectation. And I said, well, the decision for central bank governor and member of Monetary Policy Committee will be choosing between the devil and the WC. What the choice was, I don't know what the tag would be, whether it was the devil that was chosen or the WC. Because we have very tough decisions to make, very difficult decisions to make. Unemployment, as we speak, according to the National Bureau of Statistics, the last report shared by the agency of government was 33.1%. Of the labor force, which was around 70 million Nigerians. You have 136 million people who are not even part of the labor force. They are too old to work, too young to work, or not qualified to work at all. So we are managing with 70 million people to be charitable, and 33%, effectively 1/3 of that number is unemployed. We have major issue in our hand. We have growth, and from what the central bank governor said, which is very correct, in the coming period we expect that the growth will be submerged. When you now increase interest rates, to combat inflation, you are going to have further unemployment. Why? Because you will crowd out jobs. You will crowd out investment. What does it mean?
But when we left it at 11.5% for that long, how many more jobs did we really create? Isn't this, you know, a marker of, you know, the severity of the problem that we have at hand? You have admitted as much. So we know that central banks are usually quite conservative in terms of how they increase interest rates. Isn't this an indication of just how severe the problem of inflation that we have at hand is?
Well, inflation is one thing. The question is, what is fueling inflation? We have three legs of every economy. Monetary, which of course you say monetary policy committee or monetary policy committee, yes. Then you have fiscal. Also you have trade. The trade, I mean, little or no mention of trade in our economic conversation, which is Ministry of Trade and Investment, as they put it in Nigeria. What are we exporting? One of the major drivers of inflation is exchange rate. One of the major drivers. Government is spending between 2 to 4 trillion naira on subsidy alone. Why? Quality of naira had continued to emaciate. Imagine if what exchange rate was 2015 is what we see have it today, 199. And government is talking about subsidy removal. Will it have impact on Nigerian purchasing power? No. It is because exchange rate have been emaciated over and over. Official window more than double, a parallel market more than triple. So we have that issue on one hand. We also have insecurity, which is affecting food inflation. The major driver of inflation is food inflation, higher than headline inflation. Second, third, what is happening to infrastructure? We have another challenge. So when you look at all of the major factors affecting inflation, you see that yes, we have monetary because money supply has increased according to central bank, but is that the only driver of inflation? And that is why I feel that there is no convergence in policy of the three major legs of the economy. And check any economy where you have that, you are going to have major issues. The truth is, there are other external factors affecting inflation. We have seen Russia-Ukraine war because supply as expected is not coming to Africa or developing countries. That on one hand. We have also seen that China is closing down most of the factories because of COVID. So all of this will disrupt supply side. And when supply is affected and demand remains the same, it is expected for price to increase. So as price continue to increase, do we only respond to increase in price with monetary measures? The answer is no. So as much as central bank is taking necessary decision, taking necessary measure, which includes less increase interest rate. Now, when you increase interest rate, what you expect is that you are going to see increase in savings. When there is increase in savings, expect in inverted comma is that there will be increase in investment. But is that correct? For Nigeria, and the experience we have had is not so correct. I will tell you why. When you increase interest rate from 11.5 to about 13%, cost of borrowing has increased. When cost of borrowing increases, it becomes more difficult for people to access funds to start businesses or to grow their business. So if they don't have such money, what will happen to employment? Employment will further reduce.
So this has not been done in isolation. We also know that right now we are right in the middle of a political season. So part of the pressure we're also saying on the Naira is also what is happening politically, and that's what economists also believe. So there is that part where you know, there's a lot of money in circulation, and maybe what the CBN is trying to do is also rein in the inflation that could happen as a result of that. You don't see that point?
Of course, I can see that there's a lot of money in circulation, and the way you measure is even how the parallel market rates have continued to increase in recent time. You know, the rate of increase is even higher than what we experienced 3-4 months ago. But the truth is, will this stop after the primaries? I doubt. This may extend to election. Let's put our mind back to 2014 to 15. It started like this. It never ended until 2016.
Mr. Rawane believes that there could be a temporary relief, at least maybe after the primaries. Do you also
Was
see
there
that?
election January last year? Did exchange rate not go worse off? Was there election March last year? Was it not worse off? Tell me one quarter that exchange rate, our parallel market official rate had improved significantly, if you can remember one. That information is not, as much as I understand where it's coming from, but when you observe the trend of Nigeria economy, it's not very correct. You know why? There are manufacturers that want to import equipment to Nigeria, but it takes almost forever to access funds from official window.
Do you think that business people are moving right now? Because some people will say that usually when the political season sets in, there is a lot of caution. There's a lot of caution in the air. Would they be as aggressive as they normally would be if we were not in the season of politics?
Well, it might not be as this aggressive in terms of devaluation. It might not be. I don't think it will be. Because 3 months ago, 6 months ago, 9 months ago, a year ago, it was there, but not at this rate. So you might see some level of reduction in rates, but there will still be increase. Exchange rate may still be weaker, but it may not be at the rate at which we are seeing it now, jumping almost 5-10 naira on daily basis. It's crazy. So I don't think it will be that, but that we'll now see it go back to 500 naira or 600 naira. What we need is major inflow of FX, and that will come from trade authorities. And who are the trade authorities? Policies, I mean, maybe Ministry of Trade or whosoever the President or the Constitution has empowered to do so, that we make people buy Nigerian product. We want to buy everything, but most of the things we desire are imported to our nation. So if it is quality of education that we can improve and export educated individuals to the rest of the world so that we can repatriate funds that these individuals are sending back to their families, to their friends, or to start businesses in Nigeria, that certainly will have positive impact on our economy. But we are not getting it. So when average Nigeria travel, what are they going to do? So these are concerns that I hope that we're going to look at and also see how we can improve what we earn from the FX market.
Let's flip this conversation to my colleagues now.
Well, thank you, Mark. It's interesting how much factors we have put into this conversation in just how many minutes. I mean, we've talked about the interest rates, the forex rates, inflation. We've talked about even politics, manufacturing, and all of that. Just shows how much this decision will have an impact on a whole lot of things. By the way, the CBN governor actually alluded to that political factor in his speech yesterday, saying that emerging evidence shows that money demand pressure is on the rise and is unlikely to abate until the 2023 general elections are concluded. But now let's try to focus on interest rates and the relationship with inflation, because to a large extent, that's what a lot of Nigerians feel right now, the value of the money in their hands, in their pockets, and their bank accounts. And I recall that the last time out, in making the previous decision, which was to hold, the CBN said this particularly, that tightening will not necessarily tame inflation, particularly where the marginal decline is relatively not yet sustainable. So essentially, they were saying, if we tighten the rates, then nothing would really change when it comes to inflation. But interestingly, this time around, the CBN, in making the decision, says tightening would help moderate the inflationary trade-off from the steady growth recovery so far. So I'd like you to speak to that point about this latest decision and what it will do to the value of money in our pocket. Do you see this changing much? I'd like you to go deeper.
Well, I believe that inflation would increase. It will increase at a slower rate. Now that the lending rate is expected to be higher, inflation will still increase. When you hear tightening, the central bank governor has also said that the perception of central bank as to why central bank should go and face the core mandate with which it was created. And that's one of the reasons why that policy has been made. So I'm not against the policy. I am saying that when you tighten, be ready for the implications. One of the implications will be that you will have growth at a slower rate. That is, the projection by World Bank and IMF for Nigeria that by end of 2022, our growth may be pre-COVID period, which was less than our population growth rate, or something lower than that. So when you tighten, what you are saying is that we are increasing the parameter, the basis for most of the lending rates, most of the rates within our country. And when that rate increase, it means bank can even charge more when it comes to lending rates to their customers. And when that happens, customers will have less and less access because they will be discouraged. It will become a disincentive of some sort for them to lend out. They are talking of commercial bank. If you take that to microfinance bank at the rate with which they are giving, and that also said information to money lenders, the implication is endless. So when it becomes more expensive, quote and unquote, to access funding to put in business, the implication is that economic activity is expected to slow. In medium term, it may not be in the short run, but maybe in medium term or long run, the implication again is that GDP figures will grow at a slower rate.
Right.
Maybe not up to what we have in the last quarter report by the National Bureau of Statistics. But something is very evident. It's going to grow slower, and when that happens, expect higher unemployment figures.
It just shows the difficult decisions, really. And I recall the talk about capital outflow as well. We're seeing what other banks across the globe are doing with their interest rates. So if we look like we're loosening up or maybe even holding, then there might be more capital outflows. But speaking of perception, quickly, you talked about, you know, the CBN governor also spoke about the perception, which you referenced, that if they were to hold, it would look like they're abandoning their, you know, their core mandate of, you know, ensuring that inflation is sorted in the country. But I'd like you to speak to us about the perception now in the business world, economists, off the back of the controversy around the CBN governor, that the reports that he was going to run for president or otherwise. Has that had any effect? You said perception, and it reminded me of that. Has that had any effect on maybe the perception locally or internationally from where you sit?
Well, from what I see, there are a number of things to check. What is happening to stock? How has the market responded to the decision made when the central bank governor was alleged to have interest in running for election for office? Political office under the platform of one of the major political parties in the country? What has happened to inflation? What has happened to exchange rate? Has Naira further devalued? These are information we can get, and they're in the public domain. So, but now the conversation is different. So I'm not hearing, you know, because to me, the central bank governor has never made any publication to say he wants to run. And a number of interviews I've granted about what my opinion was, I've said, well, I've never heard the central bank governor, even though I saw a lawyer in court saying the office of the central bank governor is different from Mr. Emefiele, saying whether he wants to run or not. It's not said that, you know, openly whether he wants to run or not. But the perception generally in business community is that it is a bit unprofessional for somebody occupying the central bank, the office of the governor of the central bank, at the same time to be vying for office at the same time. We feel that it may not be professional, because we were expecting that if somebody wants to run for office, he will first leave that core mandate, because that's full business. Central bank governor is not a child's play. It's policy. You are in charge of the third leg, or the first leg, if you like, of the entire economy. So you cannot combine it with other things. So now the news around is that, well, it's not running again, and you could see one of the decisions that have been made to increase rate. If you ask me, whether you hold rates or increase rates, there are several implications that you have. And none of the situation is going to be sweet. If you hold rate, you are going to see higher inflation. Even with this increase in rate, expect inflation to be higher. What politicians need to understand is that no matter who you are in office, or as a politician, or your interest, economics is not stupid. It will respond to your activities. As dollars is being shared among delegates, whether they vote or not is even a different ball game.
It's extremely speculative, though.
Well, it is, but what happens to inflation? With this increase, you are still going to see higher inflation. So you have interest rate increase, you now have inflation higher, and you're expecting growth to go down with higher unemployment. So where do we see Nigerians in all of this?
We've been told that this is not peculiar to us. This is global. There is a global tightening in general, and even those who invest outside the shores of Nigeria are not very optimistic about what the chances are that 2022 could be a good year. So,
but you know my concern. My concern is that several percentage of your personal income will be eroded to inflation. Go to those countries. If they have people or family in Nigeria and they send money to Nigeria, they become wealthier by taking that decision. So what we should say is not just that it's been exposed. Inflation in America is about 7%, thereabout. What is it in Nigeria? Official number. What is your personal inflation? It's simple to calculate. Look at basket of commodity you consumed last year. You still consume the same basket of commodity. What is the increase? As a woman, I expect that you do more buying in terms of grocery than than me. It's not generic. I just say I expect, so that I'm not crucified for that on social media. So I say I expect. So, but if you check what you bought last year and what you are buying this year, find the average in terms of percentage increase. Will it be 16.82%? For mine, it's more than 33%.
Well,
so I'm wondering if that average inflation affects me or not.
Well, you said it's a personal inflation, because I know that we've been told that the basket that is normally used, or the composites, used to calculate that inflation is different from what we know. Well, it's different from the everyday items that we also use. But, I mean, let us leave the conversation here for now. We know that is something that will continue. Mr. Paul Olaje, we have to thank you so much for coming on Sunrise Daily this morning.
Thank you so much
for your time.